It's got a lot to do with the paper market, because there is a lot of paper, silver out there, and because it's such an industrial market, the banks, do use paper to supply silver, to the physical buyer, and they use the markets to hedge against those trades, which creates, this large amount of paper silver in the market. One of these days, one of these banks is going to get an order, and they're not going to be able to fill it. That's my opinion. And when that happens, then these banks will have to go into the market and start buying back their positions, which would be the beginning of a new trend or a new price for the metal. And I'm on record saying triple-digit silver, and every time I say it, people think I'm crazy, but I'm a true believer that that's where it should be.
The silver market faces a significant supply-demand imbalance, with production levels stagnant at around 830 to 850 million ounces per year. Despite this, global consumption is rising rapidly, driven by industrial applications such as electronics. As demand approaches 1.4 billion ounces annually, the supply of silver appears unlikely to keep pace, which could create upward pressure on prices. This growing demand, combined with a relatively flat supply, has already pushed silver prices above $30 per ounce, with many speculating that the metal could revisit $50 per ounce. One of the key issues affecting the silver market is the silver-to-gold ratio, which currently stands at approximately 90-1. For every ounce of gold mined, only 7 ounces of silver are produced. However, the financial market values silver much lower than gold. This discrepancy is largely due to the paper silver market, where silver is traded in financial contracts rather than in physical form. Banks and financial institutions use these paper contracts to hedge against physical silver shortages. Keith Neumeyer, CEO of First Majestic Silver, argues that the financial ratio of 90-1 between gold and silver doesn't make sense. He predicts that the paper silver market will eventually collapse when physical demand exceeds supply, driving silver prices to the triple digits soon. Despite the strong performance of the silver market, institutional investment has remained cautious. Even with silver prices hovering around $34 per ounce and impressive free cash flow from silver producers, institutional investors have hesitated to enter the market. According to Neumeyer, many await a broader market correction before making substantial moves into precious metals. If such a correction occurs, Neumeyer believes it could mirror the early 2000s, when a downturn in the stock market led to a surge in gold and silver investments. He predicts institutional capital will flow into the silver sector once the correction happens, providing the necessary support for sustained growth and potentially driving higher silver prices. We present the clips of Keith's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
The supply is not going up. Or at least I don't see it going up. The miners have been supplying about 830 to 850 million ounces of silver per year for the last 10 years. And there's a couple of mines out there that could come into production, but doesn't appear they're going to be producing anytime soon. So that 850 million ounces looks like it's going to flatline for the foreseeable future. The demand, however, is substantially increasing. We're approaching 1.4 billion ounces of consumption in silver, for electronics, AI, data centers, nuclear power plants, unfortunately war machines as well. A lot of silver goes into that industry. So the demands for silver don't seem to be going backwards, and they're going up dramatically, and I don't see that changing. We're trading at 90-1 gold ratio. I know there's people out there that don't really think much about the gold ratio, but I'm one of those individuals that do believe in the gold ratio. And I don't know how the mining sector can mine only 7 ounces of silver for every 1 ounce of gold being mined worldwide, and we have a financial ratio of 90-1. That to me makes no sense. It's got a lot to do with the paper market, because there is a lot of paper, silver out there, and because it's such an industrial market, the banks, do use paper to supply silver, to the physical buyer, and they use the markets to hedge against those trades, which creates, this large amount of paper silver in the market. So it does have some negative impacts, on the silver price, but that doesn't necessarily have to last forever. One of these days, one of these banks is going to get an order and they're not going to be able to fill it. That's my opinion. And when that happens, then these banks will have to go into the market and start buying back their positions, which would be the beginning of a new trend or a new price for the metal. And I'm on record saying triple-digit silver, and every time I say it, people think I'm crazy, but I'm a true believer that that's where it should be. The mint has only been in production since March of last year. We had a record year, mind you. We had a record quarter, selling a lot of silver. We're producing unique products like 1776 bar, where we did the Lunar series. We just released a snake. We released a dragon a couple months ago. So we've got some pretty unique products that are selling. We just hired a couple of new marketing staff into that business, and I'm optimistic that we're going to grow it substantially. We got about 5% of our annual production through that mint in 2024. Our goal in 2025 is to get 10% of our production through the mint.
Okay.
Well, as a mining company, we have to be here. This is the mining conference, for institutional investors worldwide. So all the big players are here, all the big mining companies are here. So it's a great event to, shake hands and rub shoulders with some of the, who's who in the mining sector. I know many of them, and we have, and BMO treats us very well. So it's nice to be here. But the institutional money, still is really not coming into this sector. And you would think, at $2,900 gold and $33 silver, the institutions would be just jumping all over this market. Our free cash flow in Q4 was $68 million, a record free cash flow quarter, and I think the stock was up a couple pennies when we put that out. Q1 will be another record quarter with Gatos being put into the picture, and Q2 will be another record quarter after that, because the future is very bright for First Majestic, but it's just definitely not showing up in the share price.
What would you think is holding institutional investors back? What is it they want to see or need to see?
It's a good, I get asked that question all the time, and I just think there's so much talk about the S&P being so highly valued and the NASDAQ being so highly valued. And I think they're among some funds, and maybe this is too general of a statement, but some funds just think there's going to be a stock market correction of some kind, and whether it's 15 or 20 or 25%. And if such a correction did occur, that would affect the miners as well. So I think that there's kind of a wait and see attitude out there, but if that correction ever did occur, I would almost suggest, or would suggest, this would be almost like 2001, 2002, when the NASDAQ crashed and gold was at $250, and then there was this rush of money that came into the mining sector in 2002 through 2005, and then we had a 10-year bull market in the mining sector with gold hitting 1,800 and silver going through up to 50. So I'm thinking we're going to see that all over again. Our PowerPoint presentation, it should be on our website, that shows every quarter comparison for 2024. Every quarter this year, we produced more silver than the previous quarter. The loss that showed up, it's really a non-cash loss, and this was kind of confusing to some investors because we have such a large amount of money in pesos. So we're subject to peso currency fluctuation, and also our tax liabilities are all calculated in pesos, and then it's converted into U.S. dollars, and that's how we report it in U.S. dollars. So you can get fluctuations of 10% in the value of the peso in one quarter. So you have these very noisy financial statements, which shows these losses every now and then, but they're not real operating losses. I would suggest to investors who are looking at the mining sector, look at mine operating earnings, or look at cash flow. That's really how if the mining company's treasury is growing every quarter, through the sale of metal, and their free cash flowing, they've got a pretty good business. I would pretty well ignore the bottom line, quite frankly.
Okay.
Recent trends in the silver market show promising signs, with the price of silver staying around $31 per ounce, driven by increasing demand in sectors like electronics, AI, and renewable energy. In light of these developments, First Majestic is actively managing its capital to exploit future opportunities. The company has launched a share buyback program and is focused on building a strong cash reserve. Keith Neumeyer states, "I just want to hoard cash," emphasizing that no major capital expenditure projects are planned for 2025. The company aims to end the year with a substantial treasury, ensuring it is well positioned for future growth in the silver market or potential acquisitions. Looking ahead, Neumeyer envisions First Majestic becoming a 50 million ounce silver producer. While the company is producing around 32 million ounces, it actively monitors junior mining companies as potential acquisition targets. "We're invested in some juniors right now. As companies develop or build, they could potentially be targets for us," he explains. Additionally, the company benefits from a shifting political landscape in Mexico, where it operates. Under the leadership of President Claudia Sheinbaum, the tone toward the mining industry has softened, with mining permits now being granted, signaling a positive shift for the silver sector in the country. Let's get back to the interview.
Definitely we're not seeing those very flamboyant headlines, that we saw, against the mining sector from the previous administration. She's really calmed down the tone a lot, it's early days still. It's only been a few months, but there are permits now being granted. We've got a couple. We've been told we've got a couple that we're waiting on, and they've told us we'll have our permits in the next couple of weeks. It's for tailings rehabilitation and so on. But you need those permits from the environmental authorities to do that work. But other mining companies have been getting permits, so yeah, it looks like a big change is coming in Mexico, which is nice to see.
And is she got a 4-year term, a 6-year term?
6 years. Guidance on our production levels around 32 million silver equivalent ounces, and our cost, for that will be somewhere around 19 to 20 in that range, all-in sustaining cost. Cash flowing, it's hard. It's really hard to say because metal prices. If we have metal prices stay where they are today, we'll have around $200 million in free cash flow for 2025. The treasury right now is quite strong. We have almost $400 million in the bank right now, which is the highest treasury we've ever had in the history of the company. We went through a bit of a hard time over the last couple of years. We had, the Licantata lose their water source, or at least a third of their water source. We had the labor relations issues at San Dimas, and then we had the Jerry Canyon issue as well, in a way. And now those are behind us. Licantata is back on track again. We got the water. And Santa Elena is just, always doing fantastic, which is great. And now we've got Los Gatos. So we've got 3 mines that are over budget and 1 mine that's slightly under budget. We're going to buy back stock. We have been in the market already. We news released just a couple weeks ago the shares we bought back in last quarter, and that program is continuing. So look for more news on our share buyback program. Really, I just want to hoard cash. That's really we don't have any real big capital expenditure projects in 2025, and I want to see ending 2025 with a very substantial treasury. That's our goal.
Hoarding cash, building a war chest.
While it is difficult to predict whether silver will reach triple-digit prices soon, there is strong support for Keith Neumeyer's belief that silver remains undervalued, with ideal conditions in place for its price to rise. Neumeyer has long argued that silver's potential is not fully realized, particularly as demand increases in electronics, renewable energy, and artificial intelligence. This sentiment is echoed by Peter Krauth, editor of Silver Stock Investor, who believes that we are very likely going to experience the greatest silver bull market of our generation. With silver playing a vital role in technologies like solar energy and electric vehicles, many experts foresee a substantial rise in its price, with some predicting that it could eventually hit triple digits as the demand continues to outpace the current market price. Share your thoughts on Keith's analysis in the comment section below. If you find this video informative, don't forget to support your finance log team and turn on notifications to stay informed about our latest videos. See you in the next video.